We've been waiting today to find out if the Fed was going to hike yet again, Fed funds rate, were they going to pause, or would they actually start to cut? And amid the banking crisis that seems to be occurring around us, many people thought that they would actually begin to cut. So the Fed decision was just released just minutes ago. I'm going to read it off to you. I've got it here in some bullet points. So the Fed raises their overnight interest rate, the Fed funds rate, by a quarter percent. This takes that rate to a range of 4.75 to 5%. The Fed says some additional policy firming may be appropriate, but they do delete their references to future increases. They also say that the US banking system is sound and resilient. They say that they are likely to see tighter credit conditions that weigh on economic activity, which leads to hiring issues and inflation. The Fed says that inflation does remain elevated. We all know this because we all go grocery shopping and we put gas in our tanks and we're paying our bills every month. We know inflation is still very much present. They said that the Fed will continue reducing its balance sheet as planned. They say that job gains have picked up at a and are running at a very robust pace. We always pay attention to the language they use. So when they use words like robust, it certainly catches our attention. And then the Fed says that their vote in favor of the policy for this session was unanimous, which means of the voting Fed members, all of them voted for the rate hike. There are 12 Fed presidents and six voting, of those 12, six are voting members at any given time. So there you have it, the Fed news. They hiked the Fed funds rate by a quarter percent. And what's interesting to note is bond market is actually responding in a manner that is consistent with the message. So typically when we see rate hikes, we see bonds improve because the Fed attempting to battle to go after inflation is a good sign for mortgage bonds, which means a good sign for interest rates. So finally, for once, we're seeing the markets respond the way they typically would respond with this news. And we'll see what that means for interest rate in the days ahead.